Today we are going to focus on a step-by-step 10-year strategy. I will walk you through every single step in the simplest way possible. So let's get started. Now, the very first step is identifying tradable areas. For this, you will need to check multiple higher time frames such as 30 to 45 minutes and then 1, 2, 3 hours or even 4 hours. What you are doing here is actually very straightforward. You are simply looking for a multi-imbalance area. Inside these areas, you then try to find multiple swing failure patterns. Now, swing failure patterns are not absolutely mandatory, but they are very strong supportive structures. Alright, you just completed the first step. It is extremely simple as you can clearly see. So what comes next? In the second step, you will move down into the lower time frames inside this tradable zone. Here you'll be searching for an extra supportive structures and possible trade entries. When it comes to your lower time frames, I suggest you focusing on 15 minutes or below. That could be 10 minutes, 5 minutes, 3 or 1 minutes. It doesn't matter. Remember, this is the same area that we identified back in the step 1. The zone with multi-imbalances and swing failure patterns. Now, for your next step, it is really beneficial to look for a support and resistance flip zone, or even what I like to call a masterclass amplifier like the previous day's high or week's high. These are natural support and resistance flip levels, and it makes your trade setups much stronger. Perfect! You have now completed both step 1 and step 2. Now we move on to the step 3. In the step 3, we are going to look for clear targets. So what are clear targets? They could be the previous day's high, previous week's high, or similar institutional levels. They could also be equal highs or equal lows, maybe even relative highs or relative lows, and possibly even empty imbalance areas combined with those levels. So to repeat, step 3 is all about looking for clear targets. We need clear targets because we always want a reason for the price movement. Why should the price move up? Why should the price move down? Usually, it is because the price heading to hunt specific levels or liquidity. That's why having clear targets is so important. And there you have it. Step 1, you find yourself a tradable area. Step 2, you confirmed it with extra supportive structures. Step 3, you identify the great and clear targets. Now let's move on and talk about the trade entries. So the entries will be our last step. This is the step 4. We are still working on the lower time frames, and now we are looking for a clean entry points. The most simple and easy way to find an entry is by spotting a microstructure break. That means watching for a shift in the trend, waiting for a small pullback into an imbalance area, and you are taking the trade. These should be small and compact trades, usually maximum of 2 are at a time. This is the most straightforward version of the strategy. But here is the thing. Reversals after a deep pullbacks are always tricky. They can stop you out many times, and that's where a lot of traders get frustrated. This is why I sometimes suggest waiting for the first break of structure if you find yourself stop out too much. Maybe you notice an inner support or resistance flip in the location, paired with an inner liquidity sweep and even an inner imbalance area forming. These setups are what I call the A+++ trades. Why are they so powerful? Because when you see that first break of structure right after the market structure break, it gives you stronger confirmation of a true trend change or a real reversal. At this point, you already have at least 2 highs and 2 protected lows on the chart. And when you combine that with something like an inner support or resistance flip in a liquidity sweep with clean imbalances, the trade becomes extremely powerful. But still, the goal is always taking small and compact trades. Keep it to maximum of 2-hour trades. Now let's walk through a full example together, step by step. Okay, here is our step 1. We will be looking for multi-imbalances and multi-swing failure patterns in this Bitcoin chart. Now notice this area carefully. We can see 3 imbalances combined with 2 swing failure patterns. This is a very strong sign of a tradable area, a zone where we can confidently look for more trading opportunities. And just like that, you have completed the step 1. Now moving to the step 2. Here we want to look for an SR flip, or maybe what I like to call a masterclass amplifier location. As you can see, there is a very clear and significant SR flip right here. Price has rejected this exact zone, the price level, at least 4 different times before, which makes it a very important location. And that's it. You have now completed the step 2 and step 1 together. Next, let's go into the step 3. This time we are looking for a clear and obvious targets. In this particular trade, we actually have 2 distinct targets. The first one is the PDH, the previous day's high, which is considered an institutional level. If you look closely, it is also combined with a set of relative equal highs. So we now have a clear target above us and strong reasons for the price push higher. Now you have completed the step 3. Let's zoom in on the area and talk about possible entry setups. Right in the center of this trade zone, you will notice the market structure break. After that, price pulls back directly into an imbalance zone. This immediately gives us our first 2-hour setup, which is a solid and a very acceptable trading idea. As you can see, this 2-hour setup is extremely compact and very tight. Then right after that, we get the very first break of structure. It is supported by a small inner SR flip, an inner liquidity sweep, and another inner imbalance. Together, this creates another clean 2-hour compact setup. Now, like I mentioned before, those first reversal points that market structure breaks can sometimes be tricky. If you find yourself getting stopped out several times, it is better to simply wait for the first break of structure after the market structure break. This way, you are trading with a stronger confirmations of the trend after a reversal point. And by looking for inner SR flips, small liquidity sweeps, and other imbalance zones, you make these inner trades much stronger and more reliable. And that's it. This is one of these A+++ trading setups. I do not think there are better setups you can ever find out beyond this all over the internet. Let's talk about how to read the markets using only hourly candles and how to understand the price action from those high time frame candles in a deeper way. You already know how to spot POI areas, points of interest, by looking at multiple imbalances, swing failure patterns, or some support resistance flip zones. This is the easy part. Now what we need is that eagle vision, the ability to read the price action clearly just from higher time frame candles. So let's say the price drops into your POI area like this, with huge red candles forming one after another, showing massive downward pressure. That usually means sellers are completely in control here, and the buyers are too weak to push back. This is a clear sign of a strong downtrend at the moment. And if you also notice large bearish imbalances forming in that same area, that's another clue that we are still in a solid downtrend. Buyers aren't responding at all. They can't even fight back against the seller pressure. Now, the first sign that sellers are losing strength comes when you start seeing those big rejection candles with large wicks. Some traders call them hammers, others call them pin bars, but in price action we refer to them as swing failure patterns, SFP. That basically means buyers are starting to step in. They're reacting to the selling pressure and giving their first pushback. Then when you start noticing strong green candles breaking upwards, it is a signal that sellers are finally weakening and buyers are trying to regain the control back. If the price keeps breaking new highs candles after one another, that's a good confirmation that buyers are now taking the control and new uptrend is beginning. However, sometimes you will see a double swing failure pattern or two pin bars or two hammers appearing on opposite sides. That usually means there's a big conflict happening in that zone. Buyers and sellers are both fighting hard for the control, and it might take a while before the market decides who wins that battle. For example, let's take a look at this chart on one of the early time frames. If you notice, we've got a really strong imbalance area that connects perfectly with a clean support and resistance flip zone. However, if you pay attention to the most recent price action, you will see that the price is crashing hard with massive red candles. It keeps breaking structure one after another, showing no signs of seller weakness yet. Buyers simply can't step in or respond at the moment. Now, if you drop down to the lower time frames, like minute-based time frames, you can clearly see the price action here too. The bears are creating new break-off structure moves one after another. It is a clear downtrend, and there is no sign of buyer response yet. Let's have a look at this example. Again, we have a clear POI area in the middle and a big crash into our entry zone. Then a swing failure pattern forms, followed by huge green candles breaking the structure by taking the highs. That's the moment sellers start to lose control fully and buyers take over. It is a clear sign of a strong buyer momentum. And when you zoom in even further to lower time frames like 5-minute chart for example, the price action becomes crystal clear. Right at our POI area, the market structure flips, and then multiple break-off structures following, pushing the price higher and higher, starting a solid uptrend in the lower time frames. Now, in this example, things get a bit tricky. You've got both strong bullish and bearish imbalances happening at the same time. And both sides have swing failure patterns as well. This is the clash of titans, buyers and sellers, the big fight, the big war. If you focus on this area, you will notice that for about 6 hours, the price stays stuck in the range, caught between this battle of buyers and sellers. The outcome of this kind of fight is usually uncertain. Either side could win. It is completely out of our control. We just don't have enough data to know who will take control yet. So in this video you've learned how to read price action by only focusing and using the high time frames. Let's work on improving our skills at spotting entries, targets, and stops all together at the same time. As you already know, some of the very best entry points come from the multi-imbalance zones combined with multi-swing failure patterns, especially when we use those mid-time frames. And when you combine that SR Philip line, it makes the whole setup even stronger and more reliable. Let's first talk a bit about the targets. One of the most common types of targets are institutional levels like PDL, which stands for the previous day low. When that level lines up with equal lows, it gives us a super clean and obvious target to aim for. Now let's switch over to entries. Right here we've got a really solid entry zone that's built around a mix of multiple imbalances and SFP, or swing failure pattern. And if you look closely, when there is an inner liquidity sweep, like the one we are pointing out here, it gives you an extra layer of confirmation and confidence. The rest is not too complicated actually. It all comes back to structure. So, what we are doing here is putting together three main elements: liquidity, imbalance, and structure, all working side by side. Now let's take a look at this chart and talk through the price action and trading details. Finding these entry zones is really not that hard. For example, if you look at this Bitcoin chart, you will clearly see multi-imbalance area forming. And if you shift your eyes over to the far right, using the early chart data, you can actually spot two very clear swing failure patterns. So what do we have in this entry zone? We've got 6 different imbalance steps, plus 2 swing failure patterns. On top of that, there's also a really clean target sitting below PDL, the previous day low, lined up with equal lows. Altogether, that makes this an A+++ high quality setup. Alright, let me switch over to the lower time frames so we can break this down even further. This is great right now. You find your entry zone using multi-imbalances and several swing failure patterns. You have a clear entry zone to work with. Now what about the target here? Do you have a target? Let's talk about that. First of all, notice this perfect equal lows. This is not an ordinary equal low. It looks like almost hand-drawn. And it's actually combined with the PDL, the previous day low, as a target. It is funny that price came here almost taking out the PDL, but it did not. Then it created the most perfect equal lows you can ever see in any chart. You can also see that this happens at a proper SR Philip area, a price level that rejected multiple times. Also on this 15-minute chart, you can notice a large imbalance area as well. Okay, all of this great, but how do we enter this trade? Let's talk about that. So on this 5-minute chart, what do we know? We know we have an extremely clear target below and a great entry zone with 6 imbalances and 2 swing failure patterns came together. So all we need right now is a great structure. So as you can see, there is a market structure break here, then pulls back into an imbalance and then crash to take the PDL out. I think this is one of the clearest setups you can take, and I saw many students on Twitter took this trade. In simple terms, what happens here is actually not complicated. This is PO3, the power of 3. Large accumulation occurs, manipulation happens at our entry zone, finally expansion pushes the price to take out the target. It is actually that clear and simple. The next day, the exact same setup happened again. This time, let me walk through everything in reverse, like reverse engineering the move. First, if you look closely, price took the PDL down below the previous day low. But how did it happen? Check carefully. The market structure breaks because the inner trend flipped and became a clear downtrend here. So structure changed to take out the PDL. But the question is, why did this happen in this specific area? Why is this area so extremely important? First of all, notice the inner SR flip right here. Then you can see the inner liquidity sweep, the equal lows being hunted, and all of this happens inside a large imbalance area. So this becomes the maximum fuel point. There you have the SR flip, the inner liquidity sweep, and the large imbalance all together. However, remember that is just the low time frame analysis. What matters the most is what happened on the higher time frames. Let's take a look at the top to see the higher time frame action. First of all, you can clearly see price was crashing badly on the higher time frames, and the downtrend is obvious. Right at this point, you can notice the 5 imbalance taps in total. And this is combined with 4 swing failure patterns sitting right inside those imbalances. And like we already said, who is dominant here? It is obvious the sellers are in control. Look at the gigantic red candles, each one making a strong break downward. So altogether here we use liquidity, imbalance, and the structure. We combined these 3 elements to take this trade. Let's keep working on improving our eagle vision by focusing only on the hourly time frame candles to understand the market structure and price action. Once you spot an entry zone with several imbalances and possible support and resistance flips like this one here, what do you do next? The most important supplementary price action you should look for is probably the swing failure patterns, just like the one you see here. These are usually marked by big rejection candles, and if that move is followed by a strong opposite candle breaks, like in this example, we can confidently say the sellers have taken full control of the price in this example. Now the question is, do we really need every single one of these signals to make it right here? Not necessarily, but it is always better to have multiple confluences working together because that helps us increase our chances of winning in each trade. Let's take a look at this price action setup that shows multiple time frames from 1 hour all the way up to 4 hours, all in a single layout. You can see the overall SR flip area right here, which happens to sit inside the multi-imbalance level. This kind of setup, the first thing you should be watching for is a swing failure pattern. And if there is a strong breakout that happens right after a swing failure pattern, like the one we are seeing here, that usually means sellers have taken the full control again. At that point, the price is either about to crash or has already started dropping really fast. This is actually a pretty simple pattern to spot once you know what to look for. For example, if you check out the Solana chart, especially if you look at the 2 hours time frame, you can clearly see an SR flip happening with a multi-imbalance level. Right after that, you will notice a swing failure pattern followed by a strong breakdown. That is the exact point where the major crash started. This is another great example of how this pattern plays out when multiple confluences line up in a single time frame. Let's take a look at this interesting chart here. As you can see, there is a multiple imbalance level showing up here, which also happens to be a clear SR flip area. Basically, imbalances and SR flips are the key things that you want to look for when identifying these setups. Now, the tricky part comes when you are trying to spot the swing failure patterns. Sometimes they don't show up clearly on every single time frame. In this case, you should have looked carefully across the other time frames at once to notice the swing failure pattern, followed by a strong break. After that, there was a good drop in the price if you notice a solid move down. Here we have a very clear multi-imbalance level across 4 different time frames, along with a strong SR flip zone. So this is where you got your confirmation or the big call to look for trades. For this setup, spotting the swing failure pattern was a bit challenging. Only the 4-hour chart showed a clear swing failure pattern in this case. Another tricky part was there wasn't a strong break showing directly across multiple time frames, so you had to be patient and wait it out. Like I said before, you don't always need to find all 4 different confluences, all the price action concepts lining up perfectly at the same time. That won't happen every single time. But again, more confluences you can find together, the better and stronger your setup will be. Let's take a look at this massive crash, a really intense drop in price. Notice how this crash started. Look closely at this multi-imbalance area that shows a swing failure pattern followed by a strong break in the candles. In this example, there wasn't a super clear support and resistance flip, for example. Like I mentioned before, it is not necessary to find all 4 concepts at the same time. You only need at least 2 or solid price action method to build a good trade setup. Now watch how this big crash actually started in this another example. Right here, you can see a multi-imbalance area with a clear support and resistance flip zone this time. A swing failure pattern showed up, then we saw a strong break on the 1-hour chart. And all that led to this huge crash. So, these all patterns combined is basically extremely powerful, helping you catch early entries as much as possible, with multiple price action confirmations to back it up. Let's talk about this Bitcoin chart using our favorite ICT multi-time frame indicator. It is pretty clear that we have this large multi-imbalance area sitting right in this zone. As you know, we found out this area by using the indicator. This area is also lining up with the swing failure pattern on the 1-hour time frame, if you take a closer look. On top of that, this is an overall support and resistance flip area as well. So basically, we got 3 different things lining up on this chart all at once. Let me break it down quickly with these visuals. We already know Bitcoin has been in an uptrend. It has been rallying pretty strongly over the past several days. Because of that, it created this multi-imbalance zone that we can potentially use to look for trades, plus a swing failure pattern here. Now, this same zone is also overlapping with a SR flip area. Again, we have 3 solid price action signals coming all together in one single area. That gives us a really nice trade zone where we can start to look for opportunities on the lower time frames. Alright, so that covers the higher time frame analysis. But what about the lower time frame analysis? What exactly should we be watching for down there? Well, it is usually better to look for some kind of structure change on the lower time frames. That way we can confirm a possible reversal using market structure breaks along with break of smaller structures. You can also hunt for those sniper style trades. How do you do that? by watching for an inner liquidity sweep combined with inner SR flip areas and inner imbalance zones. Basically, the same things we are spotting on the higher time frame also show up on the lower time frame. And when that happens, you get what is called fractal sniping. Now, let's get back to the chart and talk about this important area again. As you already know, this is the zone with multiple imbalances, along with a swing failure pattern, which you can clearly see happening both above and below. But like I always say, price action really works best when you have clear targets. So, what do we have here? Well, we got the previous day's high stink right above, just waiting for us. And it is not only that. Right above the previous day's high, we also have the previous week's high line, a price level just sitting there, ready to be taken out. On top of that, you can also spot these equal highs that formed perfectly in this area. So now we have got three different targets lining up together in a single price level: PDH, PWH, and those clear equal highs. Altogether, we have a clear, extremely clear targets here. Now let's drop down into the 5-minute chart on the lower time frame and see exactly how these trades played out. Right in this zone, as you can see, structure shifted sharply with a big imbalance. At that moment, you could have built a nice 2-hour trade setup. That's your very first possible trade idea right here. But if you are not comfortable taking the very first reversal structure shifts, or if the first MSB stops you out a lot, then you will want to wait for the first real break of structure. In this example, that's exactly what happens. It creates what looks like a fractal sniping setup, sitting just above the imbalance area, inner imbalance area. And that right there becomes your fractal sniping entry point. Lastly, you can keep trading the structure breaks all the way until our targets are taken out. Because at this point, we already have a clear target. We have a clear entry zone. And all we need to do is wait for an internal low time frame structure shift that points us toward our targets. Like I've said before, trades work so much better when you got clear targets, a clear entry zone, and when you combine all of that with an inner structure trend that lines up with your direction and your bias. Let's take a moment to talk about market structure and how we can improve the way we read the markets. For example, if you look at the Solana chart, you can clearly see that we are stuck in a very strong downtrend. We keep making new bearish breaks to the downside, showing that sellers are still in the control. So, this is a very obvious and easy to spot downtrend when you look closely. Now in this situation, we have two important targets. The first is the PDL, which is the previous day's low. The second is the PWL, which is the previous week's low. The big question is, are we going to see a reversal after the market hunts these levels? Or will the price just continue pushing lower? How do we recognize whether it's a true reversal or simply a continuation of a downtrend? Let's break that down. For example, let's say the price hunts the PDL level, the previous day's low. After that, if we notice a clear break in the market structure, maybe even the very first break of structures together, the combination could signal the start of a strong reversal. On the other hand, if the markets keep dropping, creating large bearish imbalances, and breaking the structure to the downside again and again, then that's a clear sign of the downtrend is continuing. Another thing to watch is the PWL below the previous week's low. You will notice the price often gets pulled toward this level almost like a magnet, dragging it lower and lower. Finally, one more thing to pay attention to is multi-time frame imbalances. For example, look at the both 30-minute and the 45-minute charts. When you see imbalances lining up together and the price taps into those areas before pushing down again, it makes the downtrend even stronger. Okay, so how do we figure out the point of interest, the POE, and the entry areas in these downtrends? Let's go ahead and talk about that right now. Notice three very clear things here. First, we have this big imbalance area. And right above it, we can see the order block, which happens right around an SR flip and the PDL amplifier. So this yellow circle marks an extreme point of interest for me. If you set a limit order here for a 2-hour setup, I think that's a pretty reasonable and acceptable move. But here is the thing. After just a small pullback, if you watched closely, price started to push down really strong, breaking through the lows of candles like this one. That tells me there's a good chance of price might not pull back again, and sellers could be taking full control of the move one more time. So what do we do in a situation like this? Well, first of all, this is not my perfect entry spot or POE at all. But you could still set a very small risk trade here, maybe a simple 1-to-1 ratio. Then set your real limit order above for a 2 full hour setup. You see, the market is not always gonna give you the exact perfect entry you want. Market does not owe us anything. It can do whatever it wants and whenever it wants. And that is something we all need to accept it. Now, after the PDL and also the PWL, the previous week's low, gets hunted, we are left with two possible outcomes again. One possibility is a reversal. Maybe a market structure break and even the first break of structure combined. The other possibility is continuation, where we see a strong push down with a bearish imbalance forming. As you can see, reading the market isn't really as complicated as it might look at first. The markets are always moving in a mix of just three things. Do not forget this. You need to always consider these three things: liquidity, imbalance, and the structure itself. This is how the markets move. Let's talk about the recent price action in Solana and do a full top-down analysis starting from the weekly chart. If you take a closer look, Solana has been in a very strong, almost unstoppable rally over the past few months. It moved all the way from around $120 up to $240, basically doubling its price. Now, if you focus on the most recent price action from the last week, you will notice it made a very powerful breakout. This move clearly shows us that buyers are fully in control of this coin. It also wiped out the bearish imbalance in the market, which means the bears simply couldn't hold it back. Also, make sure to take a note of this previous week's high, because that level is extremely important. Now let's switch over the daily chart and take a deeper look. If you carefully examine the daily chart, you will notice the imbalance zone here. That's the last area where price reacted before making this sharp and powerful move upwards. Just like on the weekly chart, you can see another very strong daily breakout to upside. So at this point, we can confirm that on both the weekly and the daily charts, the market is fully under the bullish control. Now, what I'm going to do next is break things down by observing the 4-hour, 3-hour, 2-hour, and finally the 1-hour charts step by step. Starting with the 4-hour chart here, notice the relative equal highs. This level is not only lining up with the previous week's high, but it also forms a set of relative equal highs, which makes it a clear and attractive target. Next, pay attention to the very large 4-hour imbalance that is combined with a swing failure pattern. That combination makes this chart structure even more interesting. Now moving down to the 3-hour chart, you will see a similar picture here. There's a clean 3-hour imbalance along with a 3-hour swing failure pattern. Then on the 2-hour chart, the same thing shows up again. We got another imbalance paired with a 2-hour SFB. Finally, on the 1-hour chart, you can see it once more. There's an imbalance along with an inner swing failure pattern. This is the exact zone where the price strongly fueled up before making its move upward. And if you look just above, you will also notice another cluster of equal highs forming very clearly. So now we are not only watching the previous week's high, but almost the triple equal highs stacked up on top. That gives us even more reasons to expect the price to continue pushing upwards. Now I have dropped down to the 15-minute chart. Please pay close attention here. We started from the weekly time frame, then moved down to the daily. After that, we carefully look at the hourly charts, including 4, 3, 2, and 1-hour time frames. And now we are finally here on the 15-minute chart. This is what I call a complete and clear top-down analysis. This brings me to a question that get I asked very often. If there is no market structure break, or if I do not want to wait for a market structure break, what should I do? Let's talk about that in detail in this chart. Notice right here at our fuel area, there's a bearish imbalance that should have pushed the price down. But instead, it completely failed. On the right side, you can clearly see the bullish imbalance that actually pushed the price upwards. Now the most important part here is where all of this action is happening. It's happening in a very critical and extremely important area. You already know this zone has been filled up by 4 different imbalances. If you look to the left, you will also see 4 separate swing failure patterns confirmed in the same area. So at this point, it is safe to say the bears have been rejected here, and the bulls are launching a full-on attack. This area now becomes a place where we can look for a trade even without waiting for a market structure break. The reason is simple. We have plenty of fuel and multiple confirmations backing it up. But remember, as I always say, your trades need to stay as compact as possible. Don't wait around for the full targets to get hit, like the previous week's highs sitting way above. Get in, take your profit, and get out. Here's the problem. Even when we see a clear target, the challenge is that we never really know where the price will actually get there. Sometimes it can take several hours, and other times it might even take days. The reason behind this is that price often looks for inner liquidity or one last bit of inner fuel or even an inner imbalance before making the final push. Just like in this case. If you look at this chart, you will notice that after hours of consolidation, the price made a small sweep. That sweep was the last move it needed before the big hunt. It was the final piece of fuel required to push the price upward. And that's exactly why it's nearly impossible to predict exact timing of when the price will hit the exact targets. I think only God knows this. This is the reason I personally prefer larger stop losses and more compact rates. Today, let's talk about how to read price action in detail by looking closely at the market structure and explore different ways of understanding how the price moves. As you can see in this Bitcoin chart, the price first hunted the PDL or the previous day low before quickly rallying back above to take out the PDH, which is the previous day high, along with the previous week's high levels. At the top, we also have these equal highs forming together with the PDH, creating a clear point of interest. And down below, we can see the PDL combined with the equal lows, giving us another strong level to watch. You will notice that both sides were heavily manipulated, with liquidations taken out on each end. After that, the price pulled back into the center zone once again. This creates a kind of range and deviation, which you might remember from our free trading course on smart money concepts. Now, let's deep dive into the move from manipulation to manipulation and break down how the market structure really works. Now we are looking at the same chart, but this time we are using the 1 minute time frame. If you take a look at the bottom left, you can clearly see that price was in a strong downtrend, pushing lower to take out the PDL, which stands for the previous day low, while continuing to make multiple break-off structures. After the PDL was hunted, a reversal started to form, and the trend began to shift direction with a clean market structure break. Then what happens next is the first real break-off structure, and it comes with an extremely nice trade setup. These moves also happens right around an inner support and resistance flip area combined with an imbalance in the market. Like I always say, sometimes skipping those very first market structure breaks can actually be more beneficial, because the reversal may not happen immediately. But when you spot that first confirmed break of structure, it often gives us much better trades, just like we see this example. From here, the trend kept moving upwards, creating new break-off structures again and again, all the way until it reached the previous day's high. Now, as you can see, the previous day's high has been hunted right here. And the question is, will the price reverse at this point, or will it continue even higher? As you know, just because the price takes out the previous day's high or low, it does not mean the market will instantly reverse. The move can keep going, pushing further and further without stopping right away. In this example, you can clearly see that there is no real market structure break for a reversal. That means the trend hasn't shifted from an uptrend into a downtrend yet. Instead, the price keeps breaking structures to the upside, climbing higher and higher as you notice. At the very top, we also have the previous week's high just sitting there waiting to be hunted. This is one of the main reasons why the price continued pushing upwards in this example. Now, once both the previous week's high and the previous day's level taken out, both of them, that's when we finally start to see the first clear market structure break. This becomes the very first sign that a possible reversal might be forming. Right here, what you are looking at is an inner market structure break shift that happens again. This actually creates a possible long opportunity in this example. It's not a bad idea because the PDH, the previous day high, acts almost like a strong amplifier for the move. But in these trades, there is one issue. The PWH or the previous week's high has already been hunted. Because of that, our upside targets are now much more limited. And this is exactly why I often say that waiting to see the first break of structure after a market structure break gives you more comfort and confidence in your trades. At that point, we know the trend change is more likely confirmed. So in this example though, the inner market structure break turned out to be nothing more than a fake move. Instead of reversing, the trend continued pushing downward. Reading the markets can be tricky because there are so many fake movements and fake signals. That's why I always emphasize focusing on clean and solid targets like PDL, PDH, and PWH. These levels can help confirm your bias and give you a clear sense of direction. And when you combine multiple structure confirmations with a strong trend, your trading decisions become much more reliable in my opinion. Let's have a quick talk about this Bitcoin setup by using our favorite tool, the ICT High Time Frame Candles Indicator on TradingView. When you apply this indicator, you can immediately spot multiple imbalance zones and quickly identify a good entry location. As you already know, we recently went over swing failure patterns. But if you carefully look at this 1-hour chart, you will notice at least 4 or 5 tricky and fake swing failure patterns showing up. That's the main reason I always encourage you to combine multiple imbalances with multiple swing failure patterns. This is really the only way to avoid or at least reduce those fake imbalance areas or SFP zones. Now, when we look at this SR Philip area, the picture becomes very clear. Right here, you can clearly see a multi-imbalance and multi-swing failure point coming together. But it is not just the SR Philip area. It also acts like a powerful amplifier because we have the previous week's high stink right there as well. And above all that, we have a super clear target. That's the PDH, the previous day's high area. So let's zoom in on this area and break it down further. First of all, right under the previous day's high, you can clearly notice that a parabolic liquidity has started to form. This formation creates an additional liquidity area that you can use as potential spot to hunt for trades. Later on, what really happens? The market structure breaks and the price dips down into this imbalance area. This area is sitting right at the EQ point of between a premium and discount zone. If you look closely, you can clearly see the breaker block already here. This is one of our old and familiar smart money concepts. Then you took this trade. It turned out to be a clean setup, giving us a solid 2-to-1 risk-reward ratio. However, there is one issue with this trade, and it is something one of my students actually asked me about. If you look at the chart below, you will notice this trade took nearly 8 to 9 hours to fully play out. Now, as a day trader, it is perfectly fine to take just one solid trade per day because it is day trading. After all, you are a day trader, so that approach makes sense. I don't see a major problem with it. But here is the question. What if you are aiming for shorter time frames? What if you are more interested in quick scalping opportunities instead of holding trades for hours? So now let's zoom in the area even closer and break it down one more time. So, if you want to trade in shorter time frames, like under 1 hour, 30 minutes, or even as little as 15 minutes, the only real solution is to use closer targets along with tighter stop losses. This is the only practical way to get shorter trades done successfully. What you do here is actually quite simple. You just follow the trend. With every break of structure, you look for opportunities to take small trades, setting closer stop losses and closer targets. Just like you can see in these examples. But here is the challenge. When you trade this way, you run into big problems. That's because when you take micro trades, you are going to be stopped out quite a lot. The only way to balance this out is by making multiple trades during the day. You might need around 4 to 6 trades in a single session to finish the day with a positive net results. Let me break this down and explain it even simpler language along with some clear visuals. First, you need to find the direction of the market, the bias. You must have a bias. For example, let's say you spot an area with multiple imbalances and several swing failure patterns. That area becomes your entry zone, the area that possible reversal starts. At the same time, you also need to identify a clear target at the top. Now you have both a direction and a trading bias. This is the first step. So, as a regular trader, you might set up one big trade with a large stop loss as a day trader. That's the classic approach of taking one single trade per day as a day trader. However, since this type of trade usually takes a long time to play out, if you want shorter trades, basically scalping, you need to write the trend from your entry zone all the way to your target zone. And instead of waiting for one large move, you start taking micro scalping trades along the way, each with smaller targets and tighter stop losses. But as I mentioned earlier, micro trades comes with a major problem. You will get stopped out too often. So the only way to make this work out is by taking at least 3, 4, maybe even 5 or 6 trades in a single day, so that overall you can still achieve a net positive result with these micro scalping techniques. Let's take a look at this 5-minute Solana chart and break down everything we can learn from just a single time frame. We actually have two very interesting price actions showing up here. First, there is the possible target sitting above the PDH, which is the previous day's high, and right below, a clean support and resistance zone, often called as SR flip zone. As simple as that, we can already identify two key things: a possible entry location and also a possible target. Now, let's zoom into the area a bit closer. Here we notice a very large imbalance sitting right inside our entry zone. And we can also see the very first signs of a possible market structure break starting to happen. As a normal trader, you would probably recognize this opportunity and decide to take the trade. That's perfectly fine. It is a valid setup and there is nothing wrong with this. This is just a very natural trade with the possibility of a very natural loss. But let's think for a moment. What could we have done differently here, especially because of this extremely large imbalance zone? Well, one option is that our stop loss could have been widened to cover the entire imbalance area. But here is the real question. Does that give us the ultimate solution? Because when you do this, you will quickly notice that your profit potential becomes much more limited. So these choices are not always easy to make, and giving a final decision isn't simple. Now let's imagine you did take that first trade and unfortunately got stopped out. It is not the end of the world. Then a second trade opportunity shows up, this time with a market structure break and imbalance forming inside the zone. At first glance, you can see that this 2-to-1 risk-reward compact setup worked out really well. However, even then, it might still be wise to cover that imbalance area. Sometimes accepting just 1-to-1 profit ratio isn't the worst thing in the world. Even though a 1-to-1 ratio isn't always ideal, the truth is we sometimes need to accept the reality and be content with the profit we manage to secure. Now let's take a look at this 5-minute Bitcoin chart. We can clearly see two important levels here. One is the previous day's high, and the other one is the previous day's low sitting down below. Above the PDH, we actually have almost relative equal highs as well. And above those highs, there is also a very large imbalance area, which you can notice right away. So overall, we already have some strong reasons why the price could move higher. If you pay attention to the very top, you will also notice a bearish support and resistance flip location. And keep this in mind. Support and resistance flips are not only useful for entries, they can also serve as great targets. This whole zone also lines up with the 112K round number level, which makes it even more interesting. Now, let's think about the entry location. Where should you actually get into this trade? What is the most optimal spot for the entry? If you look down below, you will notice a really clean SR flip area. And just above this level, we can see almost equal lows sitting there, ready for a liquidity sweep. After that, the market structure breaks and we also get an imbalance forming. This setup gives you about 2-hour trading opportunity, which is a very classic move you will see again and again. This kind of trade is not bad one at all. In fact, I've seen a lot of students took this exact trade and even posted the results to me on Twitter. Let's talk about how to read great price action using this amazing indicator called the ICT high time frame candles. This tool really helps you to understand the market movement on the hourly chart basis, especially when you are planning to trade or scalp in the lower time frames. First of all, take a look at this beautiful area filled with multiple imbalances. It is sitting right at a support and resistance flip line, which makes it even more interesting. In this tradable zone, confirming an extra swing failure pattern, like the one you can see here, really strengthens your price action setup. And if you can spot any strong breaks happening around that area, that gives you even more confirmation for your trades. It is honestly very simple to identify price action when you are using this indicator. Now let's move down to the lower time frames and take a closer look at the price action and possible trade entries. Alright, here on this 5-minute chart, this is the point of multiple imbalances, swing failure patterns, the SR flip zone, and the strong break area all lining up together. Now the SR flip looks a lot clearer on this chart. And the specific zone also includes something called a PDL amplifier, which you will definitely recognize if you've gone through the masterclasses. So toward the end, right around in this discount area, we got a really nice tradable location. Let's zoom in on this area and talk about how you can actually take trades here. The first thing I look for is whether we have a clear target below or not. And these relative equal lows make a really solid target to aim for. In our trading zone, if you take a closer look, there is a clear 5-minute market structure break going down. And that right there is your signal to enter a trade. Now, in my opinion, the perfect entry location would have been around this imbalance area. But unfortunately, price never pulled back there. In situations like that, you should still consider entering when the market structure breaks. Just make sure your stop loss covers that imbalance zones. If you missed the first entry, no worries. The next thing you can do is look for more structure breaks or new imbalance areas to catch another trades. Also notice how those relative equal lows have now turned into a clean trendline liquidity area. That's another setup worth paying attention to. So at the end, this was another 1.5-hour trade. Now these trades didn't bring huge profits like 2+ hour setups, but they were still good enough to be tradable and make some cash. Finally, let's talk about why the price reacted exactly at this point and started pushing back up. What was the reason behind that move? If you go back and look at the earlier charts with a wider perspective on especially 1 hour time frame, you will notice a perfectly shaped parabolic liquidity lining up with a large imbalance zone. And if you have taken any masterclasses before, you already know that these spots are usually perfect target zones and the reaction zones as well. Notice how the price reacted beautifully right here. So, what we did here was combine liquidity, imbalance, and the structure all working together to identify trade zones and take some solid entries. Okay, let's take a look at this Ethereum chart and talk about price action so we can find the best possible trades to take. When I look at this chart, the first thing that really stands out to me is this clean SR Philip area. This looks like a strong reaction zone and probably the best area where we could expect a solid price move. But at the same time, if you take a closer look here, you will notice that within this zone of multi-imbalances, there are already a few swing failure patterns that have happened. So the question is, do we wait for the SR Philip zone to get tested? Or do we trade based on these swing failure patterns and multi-imbalances? Because honestly, both of these areas are giving us potential trade setups. So what is the best move here? The answer actually lies in the inner time frames, the lower time frames, and the smaller internal structure of the market. We need to pay attention to how the trend is developing inside those lower time frames and see what kind of price behavior is forming here. Alright, let's switch over to the 5-minute chart and talk about what is happening inside that inner area in more detail. So right now, this is our multi-imbalance and swing failure point. We already found this out using the higher time frames in the previous section. It also happens to line up with a MASTERCLASS amplifier level, which is the previous week's high. This is a pretty strong sign that a possible reversal could have happened here before the market pulls back deeper. Now the next question we need to ask ourselves is, do we have clear targets to move towards to? And yes, we do. We've got the previous day's high combined with this inner trendline liquidity as well. So we've got some clean, visible targets sitting above us. And right around our multi-imbalance and swing failure zone together with the previous week's high amplifier point, the inner structure began to shift. First, it formed the initial market structure break. Then it started creating more breaks of structures one after another. You could have traded any of those break of structures since there were imbalances inside them if you notice. Each one of those could have been a solid trade setup with nice opportunities. But what if you missed all those break of structure moves and you are super late to the party? After the previous day's liquidity hunt, the PDH might now start acting as a support level here, though we don't really know for sure yet. So if you took a trade here, like in this example, that is actually not wrong at all. You should always be open to taking trades when setups make sense. You cannot avoid every single trade setups out there. However, in this case, this trade did not work out, if you can see. The inner structure actually flipped again, this time shifting into a downtrend. Take a look at it. You can see a market structure break followed by several more breaks heading downwards. So overall, what we did here was combine liquidity, imbalances, and the structure together using both high and low time frames to find the best possible trade setups available for us. Let's take a look at this interesting Bitcoin setup and talk about how we can approach taking better trades. First of all, you can clearly see that the price pulled back into this big imbalance zone, actually tapped into 6 different imbalances altogether. Now, at first glance, it looks like several swing failure patterns showed up. But in this case, most of those swing failures ended up being fake outs. If you take a closer look at the area, you will notice multiple swing failures formed again and again and again. And honestly, almost every single one of them faked traders out, including myself. Sometimes it is impossible to avoid these fake outs. So is there really a way to avoid these fake outs? To be completely honest, not really. Some days you are going to lose trades no matter how good your setup looks. At the end of the day, once you are in a trade, only God knows what's actually going to happen next. There's no such a thing as 100% success rate. It is just impossible. Now, let's dive deeper into this area and talk about the lower time frames and how we can think about taking some kind of entries here. Now, what you are looking at right here is the 5-minute Bitcoin chart. We are focusing on the area with multiple imbalances and a bunch of fake out swing failure patterns. The very first thing that stands out is these equal highs above us, which gives us a clear target. It also lines up perfectly with the previous day's high. So in this trade, we actually have a very obvious target sitting right above us that gives us both our target and our bias. We know that price is moving upwards, but we do not know exactly when or how it is going to get there. Sometimes it happens instantly. Sometimes it takes an hour, and in some cases it may take even days. Now, if you look down at the bottom, in the same area, full of imbalances and fake swing failure patterns, you will also notice this 5-minute inner imbalance. That imbalance actually helping to support the price. Then you saw this inner structure break at the area with multiple imbalances. That is the moment that when you enter this 2-hour setup. And let me tell you something, there is absolutely nothing wrong with this setup. This is what I could call a really great trade. Sometimes it is just impossible to avoid losses, and that's just part of trading. If you are always waiting for the so-called the most perfect trades ever, you will never end up taking any trades at all. You need to take the risks. You got to learn to accept the losses as part of the game. But let's step back and talk about what we could have done differently to maybe take a slightly better trade here. The first thing we could have done is use a larger stop loss. But why? Instead of putting the stop right under that swing point, we could have made it wide enough to cover this entire 5-minute imbalance. that would have increased our chances of staying in the trade. The second thing you could have done is go back to basics to create a cost average for yourself. This method works especially well for the people who keep getting stopped out every single day. By using cost average techniques like my masterclass yo-yo technique, you can improve your win rate and avoid a lot of unnecessary stop losses. But keep in mind, the downside is your profits will usually be smaller compared to running a regular risk-reward setups. Let's talk about what happened a couple of days ago and how around $20 billion basically got wiped out. Well, not completely wiped out actually, but more like transferred from one group of traders and investors to another because of a massive liquidation event. For example, take a look at this Ripple coin on the daily chart. This is one of those altcoins that I really enjoy investing in, or more accurately, swing investing. Now, people often ask me, why do you use spot investing, focus on spots, more than leverage when you are doing long-term trades or investings? So, let's look at this single candle carefully. This single candle represents just one day of trading. On that particular day, which most of you probably remember, the price of this coin dropped by 60% in a single day. Now imagine you were using only 2x leverage, which is supposed to be the safest type of leverage out there. Even then, your total loss will be more than 100%. So what happened exactly that day? All those traders or long-term investors who uses 2x leverage, which everyone thought was super safe, there's no worry about it, got completely wiped out. Many people lost their life savings in just few hours. They were wiped out, honestly became part of the market's liquidity pool, basically food for the market. But what about the spot or swing investors like me and yourself? Well, nothing really happened. Sure, the price dropped 60%, but a few days later, it bounced right back to where it was before. I didn't even bother checking my portfolio because I knew what was like to happen and I knew that I was safe enough. So yeah, leverage can be amazing when things go your way, but at the same time, it can wipe out your entire life savings in just one single day. And this is not a joke. So, what is the lesson here? A lot of people keep asking me the same question. Why don't the markets move in a straight, perfect line always upwards? And why do actually markets always move in this zigzag pattern? Big rallies, big crashes, then back up again, yet overall they keep increasing over time, maybe in a long period. The most obvious reason is pretty simple. If the markets moved in a perfectly straight line, going up, 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 up every single day, then everyone would get rich with zero effort. No analysis, no strategy, no manipulation, and no money would ever exchange hands. And that kind of market just can't exist. It is impossible. So what actually happens in the real markets? Traders and investors open positions with all kind of stop losses placed around different price levels. Some of them win and some of them lose. Some investors cut their positions in some time. These constant ups and downs, these movements are what create a living and breathing market. Money keeps flowing from one person to another. Your money might come to me and my money might go to you. It is a constant back and forth exchange. And that is what keeps the markets alive. Some people get richer, some people lose money, and some just hold their positions staying right where they are. If you take a close look at any market out there, it really doesn't matter which one, you will notice the same things. It could be Indian stock market or the Chinese markets, oil market, Nasdaq, European stocks, crypto, or even Forex pairs. It all works the same way. For a market to stay healthy and liquid, some traders have to lose, get stopped out, or exit their positions. These moments are what we call big liquidity sweeps across all markets. And right after those liquidity sweeps, that's usually when you see these extreme rallies. Or when the price crashes hard into discount zones or imbalance areas, sometimes right around support and resistance flip levels. That's when the big moves usually happen. Those major market movements almost always come right after these setups because markets need fuel to go upside. So if you take a look at the weekly or even the monthly charts, you will start to notice some really strong price action happening here. For example, in this case, Ripple dropped around 60%. You know that. It completely swept a huge amount of liquidity and tapped right into this imbalance zone again. We are probably talking about millions, maybe even billions of dollars being lost on this coin. A lot of people got liquidated right there. But what happened next? The market suddenly rallied like nothing we've seen before. Just look at this massive wick right here. It is just insane. Honestly, this is one of the biggest manipulations we have ever seen in the market recently. Now, this is another one of my favorite altcoins to swing invest in. And what happened here? This extreme wick wiped out ton of leverage traders and some investors. It completely swept those equal lows, tapped deep into this big BPR area, the overall support and resistance flip zone, and then rallied all the way back up one more time. And check this out, another coin did the same thing. This time the triple equal lows got taken out hard. And it went so deep, even cleaned up this whole parabolic liquidity area as well. So even if you were only using small 2x leverage in your investing, you probably got wiped out that day. Some of these coins dropped over 80% in a single day, then bounced back right after where it was before. That is just insane and wild. And this is exactly why I have mastered swing investing with working agents. If you are part of my masterclass, you already know that we stay away from leverage and focus mainly on spot investing. What we do is actually super simple. We just enter the market whenever we want, and all we do is adjust our position sizes. If the price feels expensive, we invest smaller amounts. If the price drops and gets cheaper, we invest in higher amounts. So we all do this keeping record of every single transaction in a Google Sheet and keep cycling the profits over time. Our daily routine is extremely simple, just about 15 minutes a day to buy or sell. Altogether, it only takes around 1 to 2 hours in a single week. Whether the market is rallying or crashing does not matter to us. It doesn't concern us at all. Just open your computer, do your 15-minute swing investing session with your working agents, and then go back to your regular life. It's honestly that easy and that simple. Completed the free trading course but still need more? My master classes teach liquidity, imbalance, and the market structure in detail. Combine them with forward and reverse trading using momentum superboxes and yo-yo cost average entry models. After that, you will master scalping with a one-screen free trading view indicator, a revolutionary trading system. Finally, you will learn to invest your profits using my 10-year swing investing with working agent system. Interested? Please see the video description.